We're talking now about stablecoins, which actually is a really interesting area. There's been an awful lot of development in that space in the last year or so, which we're going to get into in a minute. But I'd like to introduce the panel first. We've got some people who are very equipped to speak on the subject. To my immediate left, we have Lewis Fellers, who's the CIO of Bletchley Park Asset Management, which is a crypto hedge fund. To his left, we have Ashleigh Schap, business development from MakerDAO, which is a stablecoin issuer or a stablecoin company. She'll tell you much more about what they're doing as we go on. And to her left, Pinar Emirdag, who's from State Street, head of digital product development and innovation. I just wanted to start really by talking about why there's been such a proliferation of stablecoins. Stablecoins, if you don't know, and I'm sure that our panelists will be able to define them much better than I will, are essentially tokens that are that aspire to some degree of stability, something that Bitcoin has failed to do thus far, and they achieve that either by being backed by dollars or sterling or gold or by some algorithm, etc. The various ways of doing it. But there are different groups have different statistics on how many projects are in development. The biggest number I've seen is that there are 120 stablecoin projects in varying stages of development. We heard about a few earlier from the Gemini dollar, Circle coin, and of course Tether, which we will have to discuss on this panel. But I wonder if we could start. I'll ask each of you in turn. Could you talk a little bit about why you think we've seen such a growth in development in this space? Why it's so needed right now?
I think, well, there are two principal reasons. The first one is the market necessity. Right now, we're in a bear market, and so the ability to lay off risk into a stablecoin is an absolute necessity, and that always drives invention. And then the second effect, which is really what we saw in 2017, is how do you get into the more interesting crypto assets that are trading on pure crypto exchanges? And so we need to have a stablecoin as a conduit for that path. Now, historically, using Bitcoin was fine when the price was fine and there wasn't this aberrant kind of idiosyncratic downward volatility. But now, it's really fulfilling those two purposes.
Okay. Ashleigh, what would you say?
I actually think there are a few different reasons. Obviously, having the ability to trade into a stable asset is important, particularly in times like these, I guess. But actually, I think that the reasons for stablecoins proliferating as much as they have over the last year or two is more to do with what people have realized about what decentralized applications are going to require in order to become useful. So for example, you've seen things like Augur has launched, which is a prediction market. Well, if you're going to make a prediction in Ethereum and also on some political outcome or sports outcome or whatever, you're taking two risks there, right? And so as we've started to think more about what can actually be done with programmable money and incentives and all of the things that bring everybody into these rooms to talk about these things, we realized that having these volatile currencies is really sort of just not tenable. And then I guess the other reason that they've proliferated so much is it was a very, very good year to be raising money for a stablecoin last year. So we saw some absurd, basis raised, whatever it was, $120, $130 million. So I think you saw a lot of projects kind of coming along that train, and we'll see what comes out of that.
So actually, continuing from that, I don't think that stablecoin concept is only about trading or using it for as a way to get off an exchange and so forth. I think exactly as Ashleigh said, I think we are really figuring out how to use stablecoins for more broader use cases. So we are actually looking at potentially. It's not me necessarily this, but the market is potentially looking at how do you actually make payments with stable coins? What does it mean? Those are new payment channels. We're talking about whole decentralized world. Okay, we believe it or not, it's besides the point. But I think that if the direction of travel is that, we will need some kind of coins to do that. And also this whole topic of stable coins is not really new. I mean, it actually emerged some years ago. We didn't really have use cases. I think what happens in crypto space often is people actually get inspired by each other. And like early papers were around, I think, 2014 or so, but not many people actually worked on it. Right. And so, maybe there was no need for that. There is actually a bit of an element of also, I think, Bitcoin, crypto volatility impacting these kind of conversations as well. So like it's a bit of a new payment channel, programmable money, new ways of creating distribution platforms and so forth. So I think like innovation just literally came together, all of these together with funding came together to foster innovation. I think that's what we are looking at.
Okay.
Exactly, and I would just say, just to add kind of something to that as well, is that you know, all stablecoins are not created equal, and I think we'll see that some stablecoins will be used for different things, right? If you think about stablecoins, although they're meant to be less volatile, they do have different use cases kind of depending on what you're looking to do in the market.
Mm-hmm.
I mean, it's, I think, normal market 101. It's like literally you will have different use cases, different type of distribution channels, different networks from retail to different types of retail to fintech, so forth. So just, it is a new way of potentially moving money around in some ways.
Right. One thing that I'm intrigued about when it comes to the reason for there being so much growth in stablecoins is the Tether story. And if anyone is here who's able to walk me through exactly the Tether story, I'd be very interested in that on the panel or otherwise. But obviously, Tether has had a lot of, as was alluded to in the opening remarks today, it's had a lot of reputational issues. They've addressed some of that. They've made some public statements. But I wonder, is some of the growth just simply an opportunity, people seeing, oh gosh, look how much Tether has grown. At one point, I think it was about 3 billion. This is a business opportunity. There's demand for this coin. These guys are not doing it properly, or at least there's a way of doing it better. Maybe we can get in on the back of that. I mean, Ashleigh, what do you think, and perhaps others, do you think that that's part of the rationale for some of this growth?
Well, so, you know, folks have been working on Maker for much longer than Tether has been in existence. It was actually originally built on BitShares and then was built on Ethereum, and Ethereum came out. So Tether, I think, was founded out of necessity, right? So it was founded by Bitfinex. Bitfinex was, at the time, I think, the largest or one of the largest global cryptocurrency exchanges. And, you know, Bitcoin trading was hot, right? It was constant, and people were, I'm sure some of you were sitting behind your Bloomberg terminals instead of doing your jobs trading cryptocurrencies, right? And there wasn't a really productive or efficient way for their traders to move money in and out of cash, or what they thought of as cash, right? So that is why Bitfinex created Tether. And you know, we've actually, you know, we've spoken to the guys there. It's funny because although they're a centralized exchange, the founders of Bitfinex are actually pretty, you know, committed to the decentralized idea. And you know, they told us if DAI, MakerDAO's stablecoin, would have been, you know, created 6 months ago, we probably never would have Tether. But at this point, they're making too much off the interest from the deposits to roll it out. So.
That's exactly what I was about to add, that the overnight interest rate that people forgo is just a huge incentive for people to enter this space. You know, what is it, around 2.18 at the moment for the overnight rate. And so people in crypto, at the moment, they're very kind of indifferent to losing that interest. But as we move into a higher rate environment, I think it's going to be one of the headwinds we face in crypto.
Mm-hmm. And you know, everyone loves to talk about the risk of Tether, and they're not transparent, they're not really auditable. Right. They have made some moves to sort of fix that. I think I saw something last week that you can redeem, you know, up to 100,000 plus at a time now directly. So we'll see. If anyone's tried that out, let me know how it goes. But I think, you know, at some point, their idea, from what I understand, is potentially to wind this down, right? And really, it's a big risk to be using it as a user because of all of these issues. You can't see their bank accounts. They haven't provided any real transparency into what they're working on. But in another way, if you're an international user of a dollar-pegged stablecoin, it might make more sense than using something like a true USD, which has transfer restrictions, right? There's an Ethereum address that can, you know, delete balances or stop transactions in their tracks. So, like I say, different kinds of risks, different strokes. So.
And just, I mean, again, I'm not really an expert in Tether, I have to say, but if you, and I can see that there are actually lots of projects in the marketplace, either existing or emerging, that actually probably didn't think about Tether at all when they came to the market. They actually are looking at like other inspirations for this kind of stuff. So how do we actually create, again, like money, different types of payments, new types of doing things. So it's a I think they are actually, the background for that is not necessarily about what they saw in the market in this Tether side. It's more around, you know what, this whole crypto space has been going on for a while. It didn't really quite maybe do what some expected. By the way, that's also debatable. I'm not claiming that this is what I think, but how do we actually do something like that in a different way? That might be one of the inspirations. And there's one more reason. Frankly, I don't think we actually know like how to actually create these coins in a very, there are so many experimentation to be made. So people are doing that. They're actually coming up with platforms even to enable that.
Right.
So that is experimentation.
Right. I'll take this point just to remind you that if you do have any questions for the panelists, please do send them through. We've got our audio-visual colleagues are about to show us a chart from Morgan Stanley. They had a research note out earlier, a few months ago, that shows that it shows you what Bitcoin is traded against, and the green section there is crypto. And if we go to the next slide, if that's okay, that shows, you should see the data when it comes up in a moment, showing that effectively it's mainly predominantly trading against Tether. That there was a period when Bitcoin was mainly traded against the dollar, then it shows against the yuan, and then now it's mainly against Tether. Potentially the data may have changed slightly. I think this was about a month ago. We've seen USDC and some of the others get a bit more traction. But I wonder though, is kind of the amount that's gone to Tether and the growth of this system, is it just sort of a necessary infrastructural fix now? In terms of some exchanges don't facilitate crypto to fiat, it's just crypto to crypto, and crypto to fiat involves additional costs and so on, so maybe it's easier to go into a stable coin. But do you think a stable coin is there a long-term future for stable coins? This is what I'm asking you, or is it just a kind of a necessary fix for
I think there is absolutely a long-term path here for stable coins, because it's just superior to trading in dollars. For my fund, if we're working on an arbitrage between Japan and America, obviously we're confined by the banking system. And that means we're obviously confined to business days. And then also as we go across geographies, sometimes we get hooked on the time zone. Right. And so the stable coin is a panacea for that. So it's a huge step forward, and I don't see that disappearing. And to look at the chart there, that is obviously very intuitive when we look at the performance in the bear market that we're currently in. It's very logical that as people sell down on the periphery exchanges from the pure crypto, they need to go to a safe place. And so Tether is at the moment the go-to, but I think we'll see an expansion, not just in the number of coins, but the volume traded into the USDC, DAO, et cetera.
Yeah, I mean, I guess safe is a relative term when we're dealing with crypto assets, right? But yeah, I do think that this chart obviously shows that there are lots more. There's lots more volume being traded on exchanges that are not fiat exchanges, i.e., probably not compliant exchanges. So I think a lot of this volume that you're seeing in Tether will probably go down over the medium term as you start to see more governments kind of get smart and regulate in their jurisdictions these exchanges that are kind of using this as a way to operate fully outside the banking system. But then too, I also think that we're going to increasingly see stablecoins being used for things which are not selling Bitcoin, which I know sounds a little crazy to you guys right now, but we're seeing it. So MakerDAO, for example, has a partnership with TradeShift, which is a global supply chain finance payments technology company, and we're helping them to integrate DAI, which is our stablecoin, to ultimately settle across their supply chain, right? And do that much more quickly and at much cheaper rates. And so we're going to see it used for things like that. We're going to see it used for consumer applications like Augur and Gnosis and some of the prediction markets that are coming out. We're going to see, different types of remittances and different ways of we're just seeing so much building happening in the space. So ultimately, while Tether is interesting, probably if you are trading on, an exchange that doesn't KYC you, for example, and some strange jurisdiction, great. But If you're going to actually be using this as cash and actually interacting with it on a day-to-day basis, you're going to want to use something that you can trust and that you know has value behind it.
I mean, I think this is exactly the story we're talking about, right? I mean, so if you make the case, use case as narrow as exchanges and certain, exchanges and certain type of trading, yeah, I mean, I'm not sure about what it actually means, but the use cases are so much broader, and there are very concrete examples here. And the only thing that I would say is I'm not sure if we would be calling them stable coins at that time. They may be called something else. We may be all looking at a whole different word, which probably is more likely than not.
Right.
And one other thing is that stablecoins don't necessarily always need to mean stable at $1, right? So we've seen this with like Digix, for example, and even DAI, while it is currently pegged to the US dollar, theoretically could float, could be pegged to some kind of consumer price index or something that makes more sense. And one of the things we talk about a lot is the Triffin dilemma, right, with the dollar. So the Triffin dilemma was economist Robert Triffin in the 1960s. He developed this idea that if a state currency is also the sort of global exchange currency, basically, federal treasury for other countries, as you see with the dollar, there's a real issue there because the country that is going to be this global currency has to be willing to basically inflate the supply of their currency in order to provide that reserve for other nations, and there are just some inherent conflicts with that. So you'll see stablecoins that could change in nature over time that are going to help ameliorate some of these larger global financial issues.
You see, we're already moving into that whole flexibility place.
Yeah, I think you could see a stablecoin on the SDR basket, for example, would be a big step forward. And I think the earlier panel was talking about volatility, and from my perspective, volatility is always relative, and so it depends on your base currency and the asset class that you're exposed to. And so having multiple stable coins that allow us to manage that volatility from a relative perspective seems like a logical step forward. With regards to the use of the USD as the kind of base currency, obviously a stable coin is then kind of based upon the economic or Federal Reserve of that underlying currency, and so in some ways it has failed as a stable coin.
Without wanting to get too into the weeds, I wanted to ask a little bit about the different ways of structuring stablecoins. I mentioned briefly at the beginning that some are backed by the dollar, others have some ties to gold, or there's algorithms. Actually, maybe we'll start with you because you can tell us a little bit about DAI and how that's structured, what's behind it, and what was the thinking behind that.
Sure. Yeah, so MakerDAO has created a product called DAI. DAI is a dollar peg stablecoin, as I mentioned. But instead of being backed, whereas Tether or USDC or some of these other tokens, TrueUSD, are backed by a bank account that holds X number of dollars and X number of tokens are issued against that, MakerDAO's DAI is backed by a pool of valuable tokenized assets. So right now, as we're kind of in our beta phase, where it's backed by Ethereum, but in the future, as we launch multi-collateral DAI, which will be coming out shortly after the first of the year, it'll be backed by tokenized real estate, tokenized securities, tokenized commodities, really any kind of valuable tokenized asset. And we're hearing more and more, I think with securities panel token, it's headed this way, right? Value is going to be on-chain, and we're going to be able to interact with it. So what happens is when you actually use MakerDAO, you're sending some valuable asset, let's say Ethereum in this case, keep things simple. You're borrowing DAI against it at a set interest rate and at a set collateralization ratio requirement. And a smart contract holds onto your collateral until you've repaid that DAI. Once you've repaid that DAI plus the interest rate, the collateral is released back to you. The same process would apply for any collateral type. That means that every single DAI in existence is backed by more than $1 of collateral at any given time, which provides stability. And it also has interesting implications for just how we think about value in terms of a stablecoin, and how do you actually ensure stable value at a kind of global level over time, which varying currencies depending on how things are going We'll see. And then, I don't know, I'll let someone else, if you want to talk about some of the other models out there.
Yeah, the other model is just let's put the assets into an SPV and audit it annually and prove that we have those assets contained within the SPV. The beauty of the DAO model being kind of based upon an equilibrium of game theory is that there will be natural arbitrage to manage the stability of the price. The downside, though, is obviously there is a collateralization, and so in a period of distress, it relies on the game theory to bring that collateralization back into play. So the current environment we're in, where we're seeing a huge amount of distress in the market, is a real good test of DAO's model. The other model of an SPV tends to get a little bit too much trust. Obviously, we all know about the risks of Tether, and we saw it drop to, I think the low was 85 cents. A lot of the other stable coins trade at parity to the dollar, which I think is a mistake. How are these SPVs rated? Most of them are, they're set up in a jurisdiction which is possibly not the best. We see them in Belize, some lower quality jurisdictions. And so if I were to look at the overnight interest rate that I'm sacrificing when I put my dollars into this SPV and then put a credit spread on this, where would I put the value? It's probably around 98 cents for the risk that I'm taking on in any of these stable coins. So there are different benefits. Obviously, the equilibrium model is probably more sustainable. The SPV requires a lot more due diligence on the counterparty risk.
Okay, and someone needs to fit the bill.
Absolutely, somebody has to set that SPV up. And so if they're earning the overnight interest rate, and I think that's a big driver of why people are going after Tether's pie, to earn that.
Okay, got a few questions for you from the audience, actually. One is, how does DAI deal with the volatility in Ethereum at present? Is that something that you're thinking
That's
much
a
about?
great question. I'm sure all CDP holders, who are the people who've created DAI, are thinking about that right now at this moment. But actually, DAI has been remarkably stable over the last year. We launched it on, I think it was December 17th of 2017, and it has been right in line with expectations all year throughout. Long, steady decline, and even through some of the sharper declines as we've seen over the past couple of weeks. And interestingly, our collateralization ratio has remained relatively stable over time. So what you're seeing is users are engaging with this in a responsible way, right? Which is nice, and means that DAI stability has been strong so far. And it was built to withstand a black swan event, right, ideally. So this is kind of a bummer, but it's not the end of the world.
Okay. Looking to the future then, so we've discussed that there's been a huge amount of kind of development and interest in this space. Pinar, perhaps I could ask you first. What's your outlook for kind of how many stable coins there will be in, say, 5 years' time? And I mentioned at the beginning there are, according to some estimates, as many as 120 now, and with others still in development. Say 5 years, 10 years down the road, how many of those are left standing?
I cannot possibly give a number. That's not even technically. It wouldn't be scientific in any way, right? But I think if we I'm looking at everything from a more market structure perspective, and as far as I'm concerned, those things are all market structure products. And as I mentioned, we may not even call these things stable coins. I mean, they could be called coins, assets, whatever it is that they will be, but they will be many different versions, I think, of this for different reasons, for different use cases, for different type of people. So if we, the only thing that I think that I can probably think about is, it's better to look at market structure and foster innovation and assume that there will be many different things that will happen. It's interesting to look at platforms that enable this, I think, innovation, and then also the products and services that actually service them. Right. So those, I think, are also evolving, and we see that. And so you can actually experiment with different types of methods and try to create networks with different use cases. And the people are working on products and services for those new market structures for those coins.
What would you say?
I think we're just getting started. I can see a huge expansion. We could see them for each of the main currencies, and then we could probably see 4 or 5 versions of those. Right. Then I can also see evolution where obviously there's a sacrifice of the overnight interest. We'll see stable coins that will pay interest. Then we'll probably see stable coins based upon, well, we already see them based upon gold and other assets. And so there will be a rush, much like we see within the current exchange ecosystem, where we'll see this huge expansion. And then we'll see consolidation as the liquidity will be a driver. And some of these projects, especially the SPV type vehicles, will be unprofitable. And so those coins at some point will delist. And so I think we're still very early in this. And maybe it'll settle out to around 100.
Okay.
That's a nice round number.
You've got to pick one.
Got to pick one, I guess. I do not have any idea how many stablecoin projects will still be standing. I know that many of them raised a decent chunk of change, so we'll be able to keep the lights on and I don't know, beer pong going for the next couple of years, I'm sure, if they want to. But I think that there's some notable examples of situations where stablecoins are not going to work. Senior shares models in general are problematic on stablecoin. You've got Basis and a few others that are focused on this that I think are, particularly as the basically liquidity in the market in general slows down, senior shares models become pretty much untenable. And then you've got other projects, Terra Money and Haven, a couple of others that use their native token as collateral to back their stablecoin, which in situations where no one cares about crypto anymore, that's obviously problematic as well. So there are a few business models that have come to the fore that are definitely going to be sort of done away with, I think, over the next year. Now, I think there will be new entrants to the market. I don't think that Gemini or Coinbase coming up with their own stablecoin is going to be an isolated incident. And I agree with you that I think that you'll see, euro-backed coins and backed DAI is going to be, we're going to repackage DAI in a euro-pegged version and some other national currency version. So, look for that next year. But it's not going anywhere, that's for sure.
Can I perhaps add something to it? Because I think there is a bit of a interesting situation going on as well right now. Because we are looking at a world where we are looking at the creation of these kind of new coins, but we are also living in the legacy world as well. And the projects are trying to stabilize these coins with more traditional assets and so forth, and the legacy systems, legacy interactions. I think these are going to be. If you look at future, these can be actually quite interesting things to play around with. Like right now, many of the considerations that we have, looking at these marketplaces around, what does it mean for stable coins, is actually on an environment where it's actually all legacy way of interacting with the traditional financial services, and there are always interactions. So.
Okay. As a final question, our time is almost up. Some proponents of stablecoins talk about them almost as if they could be the fulfillment of Satoshi's vision, as in a digital cash that you could actually use as cash. Imagine that. The volatility is not all over the place. Do you give any credence to that view? Do you think that that's kind of what we're talking about here, or this is more a business opportunity or a market development?
I think it's a halfway house. I think Satoshi's vision was more to have a monetary system outside of government control, and a lot of these stable coins are still based upon the dollar, and so you're still within. You have a lot of the benefits of the blockchain and part of the vision, but you're still bound to that underlying monetary system.
Maker has talked a lot about this idea. In fact, our CTO, Andy Millennius, just gave a presentation about this at DevCon a few weeks ago, if any of you wanted to check it out. But that, yes, we have created a global stable currency that is intended to be outside of a state, but allow global financial inclusion to happen, right? Mm-hmm. And so we do think that people will be transacting with one another, and that it's necessary to have a stable value of exchange to do that, stable medium of exchange.
Okay, as I don't know Satoshi, I don't know his vision, and I actually don't think that we can comment on. Can't comment on that. But I think it's just really a journey, right? We have been going through, and it's just literally I can see how it started with something, been interested in this for a while, and then it's literally correcting itself, and it's I'm not sure what the original vision was, but this is innovation, invention, and we're going through it.
Great.
And it's peer-to-peer systems.
Fantastic. Well, thank you all, Pinar, Ashleigh.
Thank you.
Thank you very much. Thank you all.
Thank you.